I'm here with David Morgan on Currency Countdown. How are you this morning, David?
I'm doing well, thank you.
Well, thanks for joining me. I'm going to start with the summit in Paris that happened earlier this week. When they failed to come up with Euro bonds or transfer union or add to the size of the European Financial Stability Fund, what do you think? Do you think the euro is going to survive in its current form?
From my aspect, it's doubtful. At some point, one or more of the countries are going to opt out and go back to their own currency. I think Greece is an example. Could certainly be Spain. It could be any of them. Italy, and devalue back to their own currency, and that will put them back in their own sovereign status. I really think that is a distinct possibility. I really don't think that the euro will survive in its present form longer term.
Oh, okay. Well, I wanted to ask you about with the euro and the owners of significant wealth, and should they be taking out some kind of insurance against the euro right now? What should they be buying more gold and silver? I have a lot of people asking me right now, Tracy, should I be buying gold and silver right now?
The answer is yes, and it's been happening quite a bit. I mean, for basically 2 decades, one of the main suppliers of gold to the market was central banks. And now that's shifted recently meaning past several months, where central banks are now net buyers of gold, not net sellers of gold. And of course, this puts a much more upward pressure. And when you consider the possibility of further deterioration, not only in the financial markets, but currencies as a whole, then you see more and more pressure into the gold market. And what you really need to consider is that these central banks obviously can create money out of nothing and have been doing so for years, which is one of the main problems. So they can basically come up with funding, if you will, to buy gold at nearly any price. So just to say something I'm fond of saying, gold really doesn't change. An ounce of gold has the same mass anywhere in the universe forever. So what changes is the amount of fiat money that's willing to change from that status, from fiat into gold. So there really, in theory, is no upward price level that you can put on gold at any juncture. What you need to really consider is at what point does the financial system stabilize and how.
Okay, well, I was reading, in the last week we've had a slowing second quarter gross domestic product from France, Germany, Holland, Central Europe, Japan, and Hong Kong. America is just about to embark on its own bout of budget balancing here. How likely is the recession in the U.S. and Europe by the year end?
I think it's almost guaranteed. Actually, for my work, we really never had a recovery from the recession. Certainly, if you look at the charts produced by the Federal Reserve Bank of the United States, you can make an argument that we came out of the recession slightly, but that's based primarily on quantitative easing and a lot of new money creation that really didn't stabilize the financial system. And specifically, Tracy, it did not incur any new physical economy growth. And what I mean by that is, how many new manufacturing jobs, how many new products, how many new real jobs that create wealth were produced? And the answer to that's none. The answer is that there really was less productive capacity utilized over the time frame now and through the whole recession during that whole time frame.
Recently the U.S. Fed has started worrying about financing ability of Europe's banking subsidiaries. How vulnerable is the U.S. banking system to a shock from Europe's banks?
It's a set of dominoes, really. So the word, it's a big word, but it's very important, called systemic risk. If one of them goes down, then it falls. It could take others along with it. That was the problem that happened in the 2008 financial crisis, is that once Lehman went and Bear Stearns went, we started to get in a position where it was going to start taking down the whole system. And of course the Fed intervened. And I'm not saying right or wrong. I mean, if I was in their shoes, I certainly would have done probably what they did. So there is that risk. What is the possibility? Well, certainly it's possible. Is it probable? That's a harder call, I'd say, but certainly it's probable. What percentage? I don't think anyone knows. I think we have to be aware of it. And the more awareness that people have, the greater rush into something stable becomes. In other words, the more that people, entities, sovereign wealth funds, nation states, and central banks recognize the problem, the more of a shift there'll be to something tangible like gold to protect and solidify their financial status.
Okay, I agree with you as well that the recession had not ended. So I'm kind of amused by this comment here. Morgan Stanley has suggested that the chance of global recession has risen steeply in the last few weeks. It's kind of my perception that the media has just drawn a lot more attention to it recently. While they still think it's unlikely, they are acknowledging the possibility for the first time that a double dip is a possibility. I think I already know your answer on this, but would you go ahead and comment for us again?
Sure, I do believe that we're going to see a double dip, and I do believe, depending on the severity of it, it could put pressure on gold. Now that's counterintuitive because you say, well, all these problems you just said a minute ago that's putting pressure on gold, and that's true fundamentally. But we also have to look at the reality of how the markets function. And many of the entities that manage large sums of money use gold as a proxy for this reality, yet it's leveraged. So for a quick example, let's say we get a huge sell-off or further deterioration in the U.S. stock market. Of course, that usually portends weaker markets globally. These people that manage large amounts of money that have gold exposure may get in a position where they need to sell gold to cover their other asset base. In other words, a margin call comes to the fore and they have to say, what have we got we can sell to cover our position? And the answer is we've got all this, gold on paper, we need to sell it. So I don't rule that out. I mean, I think pretty deep, as you know, Tracy. So that's something I'm considering very, very important. I'm also considering it as a possibility because, let's face it, the bond markets and the equity markets are much larger than the gold market itself. If you're on leverage and everything starts to deteriorate and you are asked to send in more cash, the paper gold market can be sold off, and that puts pressure on the physical gold market as well.
We have countries like Venezuela going to Switzerland asking for, to actually get evidence of their gold in storage. How hard do you think it's going to be if countries like Venezuela go after JP Morgan to retrieve their gold in storage? Do you think that this is an issue?
Well, it is. I think it's setting a precedence for something that hasn't been done in a long time. I mean, there's billions of dollars trading the gold market every day. Yet almost always none of it moves. The ownership changes, but the gold stays in whatever vault it's resting in. This is one of the first times where someone said, the gold that I own, ship it over to me. We're going to put it in our own vault. Is it going to create a problem? I think yes, it will. Is Venezuela going to get the gold? I'd say I'm pretty certain that they will. Is it going to put more pressure on the market? Absolutely.